then we'll get into managerial. Financial accounting is accounting information and analysis prepared for people outside. Underline that. The organization. These are documents that are generally created for ownership, employees, lenders, government, and the general public. These are things like your cash flow statement, your annual reports, your profit loss, your income statement. You are obligated to provide this information if you are a publicly traded company. A publicly traded company means you are what? Yeah, you're selling stock to the general public. If you are selling stock to the general public, you are legally mandated to provide financial accounting documents. Because when you decide to buy a share of stock, what are you actually buying? A piece of the company. And so that company is obligated to tell you the truth about how they're doing financially. So financial accounting is accounting information analysis prepared for people outside the organization. If you are a small, privately held business, do you have to produce these publicly? No. However, you do if you are trying to sell your business. You have to disclose honestly the financial health and condition of your business. And banks are going to require that too for any type of loan. So financial accounting, accounting information analysis prepared for people outside the organization. On the complete opposite is managerial. Accounting used to provide information and analyses to, look at this keyword, it's right in the same definition, managers inside the organization to assist with decision making. So managerial accounting is for, shocking, managers inside the organization. Students don't typically miss these two on the quiz. They understand financial accounting is information produced for people outside for a snapshot of financial health in the company. Managerial accounting, yeah, makes sense. It's for managers inside. We're finding out things like costs of production, preparing budgets, making sure that managers and departments are staying within their budgets, their allotments. They're going to help design strategies to minimize taxes. Those are things that like accounting people inside the organization will do. At Midwestern, again, a large organization, over $100 million worth of revenue, they have the resources and the need to employ people internally. They're Midwestern employees, right? That serve these functions for financial accountants and managerial accountants. But if you're a small company and you have $200,000 worth of revenue or $250,000 worth of revenue, remember, revenue is not profit. Revenue is just the amount of money coming in. And 2 employees, does it make sense for you to hire a $70,000 accountant? Probably not. But people still need those services, so they will hire local accounting firms, like a CPA firm or something, to provide these services for their company on a part-time basis. Yeah, exactly. Maybe in Wichita Falls, it'd be a place like Kennedy Business Solutions, or Brandon Schultz CPA, or David Welch CPA firm. They don't just work for you. They have a bajillion different things that they do. That's just part of their business model, is providing the service to business. Right? You understand that? Now, help me here. What screens in Mike's Bikes display financial accounting information? What screens in Mike's Bites display financial accounting information? Income statement. What else? Cash flow statement. What else? Maybe your industry benchmark report. Really looking at those kind of key financial metrics. Which ones show managerial accounting? That's what they said earlier too. Market summary is going to give you the information about the market as a whole, but it's not really getting into what's listed up here. Product summary. Because what does product summary do? What does that screen show you? How much your wholesale, how much you're getting for your wholesale, right? How much your company is collecting. How much the bike actually costs you to produce, your cost of production, and then your leftover margin, right? So yes, product summary, as well as maybe like your pro forma income statement, because what is that? What's pro forma mean? When you're making your decisions for next Monday and you go look at the pro forma income statement, what does that mean? Projected. It's like a budget. So based upon what you think is going to happen, sales-wise, price-wise, etc., this would be what we'd expect your income. So that would be like preparing a budget. Right? Okay. These are the ones where students start to kind of get them confused. Auditing. Reviewing, and evaluating. Information used to prepare a company's financial statements. When you write this one down, pause. Don't write tax accounting. Someone talk about it. That's when I'll know we've been talking. Reviewing and evaluating information used to prepare a company's financial statements. And we have internal and external auditors. All right, here we go. Any of you actually done your own income tax return before? Like, did you have to submit one? Anybody have to do that? Yeah. So you go through and you input how much money you make, all the things that you can deduct, and then it tells you how much you owe the government, right, in taxes. You know what I'm talking about? So in a way, you just made your own financial accounting information about your personal self. So you send it off, you submit your tax return. If you owe money, you pay money. If you're getting money back, you wait for your check. And in the meantime, you hope that you don't get a government letter a year later saying what? You are being audited. Why? What does that mean? It means that the government wants to take a deeper look at what you submitted, don't they? And they want you to provide more information to make sure that you were truthful. So the government audits the information we turn in, and they take our submission, and then they ask for all the supporting documentation to find out, did you do that accurately?
Why?
You want to make sure you didn't cheat?
Why we can cheat if they cheat?
Why can't we cheat if they cheat? Hey, no argument here. Because the government has a law that says you owe X% of your income as tax.
So what do you think? Just use cash?
Well, it's accounting strategy, I guess. But my point is, they're making sure you're being truthful, right? And they have this law enforcement arm that if you're not, they can fine you or potentially, I guess, put you in jail. Businesses don't. But businesses have to be audited too to make sure that they are being truthful. what auditors do. Okay? They're not preparing financial accounting information. They are reviewing that financial information to make sure it was honest and truthful. Understand that key difference. If you want to work in nonprofit, I think it's like every second or third year you must undergo an external audit. I mean, you have to pay someone to come in and audit your finances to make sure that you're being truthful and a good steward of those funds in that nonprofit. So yes, companies have external auditors, or they hire external auditors. The companies like Midwestern also have internal auditors to make sure that what's happening is truthful. You probably didn't even know this, but there's an internal auditor, and one of the things that they sometimes do is just spot check student bills. Okay? You registered for 15 credits this semester. They're going to go check to make sure that Midwestern properly calculated your tuition rate based upon what they said they would do and not overcharge you. And so that happens internally to catch for potential larger problems later. Again, it depends on the size of your business, whether you can have that internal or if you have to have that external. And then lastly, here's what you're probably talking about. Tax accounting is performed by accountants trained in the tax law and are responsible for preparing tax returns and developing strategies, trying to minimize your taxes. It's prepared for consumers and it's prepared for businesses. Accountants trained in tax law, responsible for preparing tax returns and developing tax strategies. That's why the other day we were talking about, like, maybe your parents who own a business sometimes will buy things in December because their accountant has told them, hey, you're going to pay the government $20,000. If you go spend $10,000 on this new piece of equipment, your tax liability will only go down to 10 instead of owing 20. And so to you, you're like, well, I got to pay 20 either way, 20 to the government, or 10 to the government and 10 for this piece of equipment. For me as a business, why not buy the piece of equipment and make my business better? So that would be like tax strategy. And that's not necessarily cheating, that's the law. You're just designing the best strategy to fit for you. All right. These next ones are going to have a lot of info. So what I'm going to do is I go in phases. So I'm going to go to the end so you can take a picture, and then we're going to talk about it. All right. Accountant versus the CPA. What is the difference? Because they're not the same.